In today's fast-paced world, the idea of investing often feels out of reach for many, with common perceptions associating it with significant capital and high-risk ventures. The truth is that you don't need thousands of dollars to start building wealth. In fact, you can begin your investment journey with as little as $100. Whether you're looking to save for the future, grow your wealth, or simply learn the ropes of investing, starting small is not only possible but can be incredibly powerful. This story will explore how you can initiate investments with just $100, offering practical options and strategies that can help you take that first step into the world of financial growth. By focusing on accessible opportunities, we'll uncover how even modest contributions can set the foundation for long-term success, teaching you how to maximize your resources, minimize risk, and make the most of every dollar. So if you're ready to start building your financial future, let's dive into the world of investments that anyone can begin with a small budget. How $100 can kickstart your investment journey. In 2023, John Miller, a 28-year-old from California, decided to start his investment journey with just $100. John had always thought investing was only for the wealthy, but after attending a financial seminar, he learned that small, consistent investments could lead to significant financial growth. He opened an account with a popular investment app and researched several options. After learning about stocks, ETFs, and index funds, he chose to start with a mix of low-cost index funds. His first purchase was a $100 investment in the S&P 500 ETF, a decision that would become the foundation of his growing portfolio. Over the next year, John's $100 grew steadily, thanks to the power of compound interest and the consistent performance of the market. By 2024, his initial investment had increased by over 15%, showing that starting small could indeed lead to bigger opportunities. Why you don't need a fortune to invest. John Miller's success wasn't just about luck. It was about breaking the barrier of thinking you need a lot of money to start investing. Just $100 was all it took to get his foot in the door. For many people, the idea of investing can seem intimidating, especially when they see others talking about large sums of money, like $10,000 or more. But what John discovered is that small amounts can have a big impact if invested wisely over time. In 2023, a survey revealed that over 60% of Americans didn't feel comfortable investing because they believed it was only for the rich. However, platforms like Robinhood, Acorns, and Fidelity have made it easier than ever for individuals to start with small amounts. Thanks to fractional shares, people can buy portions of expensive stocks, like Tesla or Amazon, for as little as a few dollars. The key takeaway is that anyone, regardless of their financial situation, can begin investing and start building wealth. Top investment options: you can start with just $100. With just $100, you may wonder where to begin your investment journey. Fortunately, there are numerous options that allow you to make the most of your small investment. In 2023, Sarah Roberts, a 35-year-old teacher from New York, took her first steps toward financial independence by exploring low-cost investment avenues. Sarah chose to diversify her $100 across several options. The first was a robo-advisor, which offered an automated investment portfolio for a low fee. This option allowed Sarah to invest in a mix of stocks, bonds, and ETFs, even with such a small starting amount. Next, Sarah looked into index funds, which track a broader market like the S&P 500. With the help of Fidelity and Charles Schwab, Sarah invested in fraction shares of these funds, starting with just $25 per investment. She also decided to explore cryptocurrency, allocating $20 of her $100 into Bitcoin and Ethereum. What $100 can turn into over time. In 2024, Sarah Roberts, after a year of watching her initial investments grow, began to truly appreciate the power of compound interest. What started as a small $100 investment now showed her just how significant even a modest amount can be when left to grow over time. Sarah's robo-advisor investment had earned her a modest return of 5% in the first year. While it may have seemed like a small amount, her $100 had grown to $105. But what really made the difference was the compounding effect. The interest on her initial investment wasn't just based on the original $100. It was calculated on her $105, so the next year she earned interest on a slightly larger sum. The more time passed, the more her investment was able to grow on itself. Had Sarah invested the same $100 in a savings account, it would have earned only a small fraction of interest. But by leveraging the power of compound interest through stocks, ETFs, and other investment vehicles, Sarah realized how even small, consistent investments could snowball into much larger sums over time. Is $100 enough? While $100 can be a solid starting point, it's important to understand both the risks and rewards involved in making small investments. As Sarah Roberts continued her investment journey into 2025, she began to weigh the potential outcomes. The rewards, as she experienced, could be substantial. Her $100 grew over time, thanks to compound interest and the appreciation of the stocks she invested in. However, Sarah also recognized the risks that came with her decisions. The stock market, particularly, could be volatile, and even well-established investments like S&P 500 index funds could experience periods of decline. In 2024, for instance, a market correction caused her ETFs to dip by 8%. Though she was initially worried, Sarah remembered that these dips were temporary and that the market often recovered over time. Understanding risk also meant being mindful of the time frame. Short-term investments could be riskier, while long-term investments in well-diversified portfolios provided more stability. Sarah's journey taught her that while $100 might not seem like much, it was enough to start a solid investment foundation. And with careful planning, diversification, and a long-term perspective, small investments could offer significant rewards. A beginner's guide. By 2025, Sarah Roberts had gained a lot of experience in the world of small investments, and now she wanted to share the process with others who were starting with just $100. For beginners, she recommended 3 primary investment options: stocks, ETFs, and mutual funds. Each of these options allowed her to grow her wealth without the need for a large initial investment. Sarah's first step was to invest in individual stocks. With her $100, she didn't aim for expensive stocks like Tesla or Apple, but instead focused on fractional shares. This allowed her to own a portion of a stock, rather than needing the full price to purchase a whole share. Sarah used platforms like Robinhood and Fidelity, which allowed her to buy fractional shares with ease. For diversification, Sarah turned to ETFs, which group together multiple stocks or assets in one investment. With just $100, she spread her investment across several ETFs, particularly focusing on low-cost index funds like the S&P 500 ETF. These funds tracked the performance of the entire market, which helped reduce her investment risk. Sarah also put a small portion of her $100 into mutual funds. Though some mutual funds have higher minimum investment amounts, there are many that allow as little as $25 to start. These funds offered her a professional portfolio manager who helped balance and diversify her investments. Sarah's journey showed that with careful planning, it was possible to diversify even with just $100. By choosing stocks, ETFs, and mutual funds, she was able to build a balanced portfolio that would continue to grow over time. The key takeaway was that you don't need a lot of money to start investing. Small, thoughtful investments can lead to meaningful financial progress.